Well, I got to tell you, I don't think I have done the daily financial news from such a beautiful area. Check this out. I'll show you it again at the end. But yes, folks, the daily financial news brought to you from I don't remember, a bay in Indonesia. We're going to see, I think, the Komodo dragon today, I think. Anyways, let's get into the daily financial news. Let's start with what's going on next week. First, we got Monday. Monday is a holiday. If you have it off, have fun, enjoy. Don't forget to look at your buy box. Yes, Monday is President's Day. Tuesday, we get existing home sales. Existing home sales in December, 4.02 million. I am calling that the bottom. Let's see how January did. Expectations in January are actually to go up to 4.1. I think I'm going to call like 4.06, 4.08, something under expectation, but above December, which was 4.02. Again, I am calling the bottom in the housing market in December for transactions. Yes, folks, on price, we will get 4 negative year-on-year numbers, but we have the bottom in transactions, in my opinion. That happened in December. Let's see what Tuesday brings. Wednesday, we get the FOMC meeting minutes, and it's going to be interesting. Bullard the other day indicated that he had talked about wanting a 50 basis points raise instead of 25. I want to see if the meeting minutes have that. Was James Bullard the only one? Were there other folks in the camp, perhaps Loretta Meister? But anyways, I want to see the talk of a 50 basis points. Was it a lot? Was it a little? Who was in that camp and who wasn't? Thursday, we get initial jobless claims. Remember, folks, this is our weekly drumbeat to see how the economy is doing. Expectations are for 200,000 new claims. Last week, was 194. This has been trending lower, and again, I think Jerome Powell needs to see that over 300,000 to really feel like he's making a dent. And then Friday, we get PCE, personal consumption expenditures. What's headline, what's core? It is expected that core PCE month on month will go up. This will break the trend for CPI and PPI, which are still holding, going lower, although just barely by 1/10. PCE actually looks like it may go up, not by a lot, but it breaks a trend. So that would be very important to look at. And then finally, new home sales. New home sales last month was 616. This month expected to be 619. I'm actually going to have a crazy call. I think that will beat to the upside. I'm going to say like 630. So a pretty decent beat. I'm going to expect new home sales because, again, I think what happened is home sellers, new home builders, were discounting quickly. And then I think they had a lot of sales. So we will see there. Let's talk about what a recession is and isn't. Again, there's a joke, and I think I've said it here a couple of times. What's the difference between a recession and a depression? Depression is when you're laid off. A recession is when your neighbor's laid off. But let's talk about what to do if we're in a recession, if we enter a recession. First and foremost, remember, if you're not laid off, this is your opportunity to look at assets, buy at a discount. If you're doing something that takes debt, maybe get seller financing and whatnot. If you have suffered a job loss, obviously your job's to go get the next one. But don't take it as an opportunity. Maybe expand your skill set, go to a new area, what you might do. But yeah, if it happens right now, again, unemployment is so low. And knock on wood, is hopefully okay to get a new job. But yeah, that would be the first thing. Also realize that we may be entering what I'm calling a rolling recession, right? I think the last several recessions you have been through collectively, we were all kind of just like straight down, stuff's broke, and it takes a while to build. I think what we're entering here is a rolling recession where different components of the economy feel it and others don't know what's going on. The greatest example, given we're a housing and investing channel, would be real estate agents and mortgage brokers, right? For the first time, it was just reported by John Burns Real Estate Consulting, a great follow on Twitter, that the National Association of Realtors, or NAR, has reported a drop. Yes, folks, a drop in real estate agents. Anybody shocked by that? It should happen, right? We go from doing 6.5, if you add new homes, 7.2 million transactions to something like 4.5, 4.8. Yeah, a lot less realtors in the market today. So again, lots of things going on. So again, a rolling recession, you may feel it, you may not. But again, our opportunities to buy assets and assets on sale. Also, there'll be new innovation, new companies started. I think one of the things you're going to see specifically in the Silicon Valley is a lot of brand new companies get started. And then lastly, there are some big moves to be made. I think, we've been talking about the commercial real estate market for a while now. All of that debt structure is blowing up. I think we talked about, $47 billion the other day of debt coming due in the next 18 months. A lot of that is already on watch for being a problem. So, there'll be a deal. And again, we talk about big numbers here. You and I are not going to go buy an office building in San Francisco, for example. But just realize where there's pain at the Class A, there's pain below, and I certainly will be looking for small multi-units, probably 5 to 40. There will be pain there. I'm trying to build relationships with banks and brokers and the like. So again, there will be plenty of opportunity out there if you learn your market, go after it, and get creative, right? Grow your network. Retail investors are pouring money into the stock market. I don't know if you saw this, but over the last 30 days, retail investors, you and me, have poured $1.5 billion into the stock market on a daily average. That is the highest average for any 30-month period ever. Where are people getting this money, folks? Don't we keep hearing about credit cards and savings and all of that? It's hogwash. $1.5 billion being poured into the market on average, right? Record high. So yes, some people are undoubtedly hurting, but there's still a lot of money sloshing around in the system. We still have unemployment, sub 4%. So don't believe all the scary headlines. There's plenty of opportunity out there. I don't know if you guys saw this, but as somebody who bought Meta stock sub 100, Meta and or Facebook is going to be rolling out a paid service for blue check marks for Facebook and Instagram. This is going to be a money printing business, right? How many of you would love a blue check mark? Well, now you can pay $15 a month and get a blue check mark. I don't know how much money Facebook and Instagram or Facebook's going to make on this or Meta, but they're going to print money. I can't imagine how that's not just a home run for them. So may have to buy more Meta stock. Oh, I won't, but I got 80 shares or something. Nothing to write home about, but I'll take the double. There we go. I don't know if you've seen this, but according to NAR in Q4, 166 of 186, or roughly 90% of housing markets are up. Now they're obviously in that there are 20 that are down, with San Jose being down 17% from the peak and San Francisco being down 21%. Silicon Valley agents, I tried to warn you a year ago that I live there, right? Our market was in trouble, and a lot of you were not listening, right? I think it could get worse in this tech-heavy area. So be careful. Watch out for those expensive flips. I went to a real estate meetup in Sunnyvale like 3 or 4 months ago, and I tried to warn you. And then lastly, let's talk about student debt. I don't know if you guys know this, but every month we are still sending STEMI checks, or a version of STEMI checks, to folks who have student debt. Whether you like it or not, the simple fact is every month that the student debt, which is owed, right, there's a note there, is not paid, it's another STEMI check. Now, unfortunately, this has been going on almost 3 years, if not 3 years, and we are still sending STEMI checks. Unfortunately, people now are used to not having to pay their mortgage or their student loan, so they've taken on other debt. The unfortunate reality is, if you want to slow down the economy, the Federal Reserve, all you have to do is get student debt payments kicked back on. That will have an immediate effect as people stop spending on other things. Yes, it will be uncomfortable. Yes, it will be painful. It is what it is. Student debt, 3 years, no payments, is inflationary. Is inflation a problem? Yes. Do you want to slow it down? Yes. Turn on student debt. It is that simple. All right, folks, like I said, I got 2 more things. I almost forgot again. We have this one, Kat and West. Congratulations for getting your first deal. Your card will go in the mail once I am home. And then Kyle, congratulations for getting your next deal. Your card will go out in the mail, folks. Yes, folks, I am still doing these cards. I still want to hear from you. If you get a deal, you get your first house, you house hack, you do whatever you want, and one rental at a time helped you, let me know. You can get a golden ticket for your first card, or you can get a black card. And again, you can get as many of these black cards as you want. All you got to do is get every deal gets you a card, but you can only ever get one golden ticket. So again, Kat and West and Kyle, congratulations. Now we will take another gander at the bay. And that tender right there gives you some scale of where we're at, is what we will take ashore. I don't know about you, but this could be the most gorgeous place I've ever done and probably ever will do the financial news. Isn't that awesome? Real estate investing made this happen. I can still do what I do, help you, motivate you, and I can see some pretty cool stuff. Bye.